Hello, dividend executives. Welcome back. The stock market is open, so you already know we are buying stocks and we are adding assets to our portfolio. Today's a crazy day, but you know the drill. Each and every single week, we go into the account, we buy assets, we add to our dividend income, and we get that one step closer to financial freedom each and every single week. If you are new here, my goal in this account is to create a $150 a month portfolio or dividend portfolio where I am just collecting passive income each and every single week. I do it primarily with monthly dividend stocks, but I also do have a couple quarterly in there with my backbones of VTI and SCHD. So what are we going to do? Well, we're going to buy some stocks today. We have some buying power available, and we are going to review some of the dividends that have been coming in. So we always have some buying power. We have some puts that are going our way. We have some that have been rolled out, and we're probably going to close this Soxo put out. This is up $41, $6 to close it there. So it's looking good though. Soxos ran a lot today, so probably just going to let that one get close to expiration. I'll close it out tomorrow for maybe $1 and then sell a new one. So we love to see that. The account is on the up and up today, but let's buy some stocks. One thing we need to do here as well is we need to go in and let's look at some of these dividends. So if we go in here to our brokerage account, we sort of buy our dividends. We can see that we have some dividends that are already starting to look into next month, and then we also had some dividends that came in twice this month for Glad in Maine. You can see 289 there, 273 there, and then if we come back here a little bit, we have Maine right there and Glad there as well. So double payments in September. We'd love to see that, and the dividends broke over $100 this month, and we will go over that as well. So this is the account as of right now, 10,685. We had some massive pullbacks on stocks, mainly being SCHD. This one got obliterated over the last week. Actually, over the last month, we're down 4% over the last month. But you know what that means? That means we need to buy some shares. So let's buy some shares. Let's go over some of the dividends. And I actually have a fun projection that I wanted to look at, and that is how much would it actually take to live off dividends if we were to look at my portfolio and the yield that I'm making as of right now. So we'll jump into some numbers there. But first, let's jump in and let's buy some stocks. One that has been getting absolutely hammered as of late is Realty Income 49. For the last month, it's down 11%, 3 months, 17%, year to date, 22%. This is honestly one of my favorite REITs, and it has just been hammered. So all time, obviously, it's up big time. Over the last 5 years, absolutely hammered. So don't love to see that, but I do love the fun. I still am going to put money into it. And so what are we going to do? We are going to put $50 into it. Let's go in here, buy in dollars, and we are doing $50. So we're going to do $50. That buys us a whole share, which is crazy to think. This has been around 60 for as long as I can remember. So we got a full share there, and that's going to increase our income. Realty Income, one of my favorite ones. Another REIT we are going to jump into today, and we are going to buy so that we can increase our income for next month is going to be Maine. 1.22 shares added here for Maine. Again, it adds to our dividend income just like that, and that puts us at, we have 273 coming in for Maine. That puts us at over 11 shares, 3.8% of the portfolio, and a $453 market value as of today. And then you know it. Last but not least, our SCHD. Again, this one has just been absolutely hammered lately, and so I want to pick up some more of this. This is one of the biggest backbones to the account. We're going to buy 0.7 shares here. We had a massive dividend come in this month on SCHD. $3,000 in market value, 25% of the portfolio. And let's scroll down and let's look at, if we can get down here, look at this dividend that came in, $26.94. You love to see it. As you know, I have my drip on, so that dividend was reinvested. It bought us some more shares. Let's see, 0.37, so almost 0.38 shares off of drip alone. So that's the power of what we're doing here, though. I mean, I didn't have to do anything, and I bought SCHE this week. Never lifted a finger. Didn't come out of my checking account. It just came straight out of there. So that's what we love to see. Portfolio is looking good, but I want to jump over and I want to look at the spreadsheet. The spreadsheet's where we kind of break into the nitty gritty. We look at how the account's growing a month over month basis, and you could see there at the bottom already what we're going to be looking at. So let's scroll over here. This is the start of the count. If you are new here, this is where we started. We started with 0 in January. And if you aren't new here, then you know how we've been growing this each and every single month. And we're doing it very simple. each and every single week we buy $100, $150, $200 worth of stocks. Nothing crazy. We cycle through the same stocks. I add some stocks here and there. We have some high yield, we have some low yield, we have some monthlies, we have some quarterlies, and we just buy stocks every single month and every single week. So it's really easy, and I think long term this is going to create a really fun portfolio that's going to pay me some nice passive income. So in January we were at 0. In February we were at 81 cents. In March, $8.87 of dividend income. April, $14.68. May, $20.82. June, $58.02. You can see all these funds just are slowly starting to get a little bit bigger. You know, if we take JEPQ, for example, we went from 312 to 497 to 486 to 675 to 716. So just slowly we keep buying more shares. Our drip keeps reinvesting and buying us more shares, and it gets bigger. So $58 in June. In July, $98.63. In August, our first goal was on $100 a month in passive dividend income. We hit it in August with $111.54. September, we blew it out of the water with $141.06. Now, I know that next month won't be as big because we obviously don't have SCHD and VTI, which are quarterly dividend payers, coming in. So there is that. We do still have, it looks like I need to record Devo. We might be missing some dividend there. So that might change the numbers a little bit. I'll go in and double check that. But yeah, you can see SCHD and VTI picking up some steam, adding to our next dividends that'll come in, but $141. So what's the yield? So, well, what I did is I just took the portfolio value, and divided by the income that we have for the month of September, and we're sitting at 1.32%. And so let's jump into a little bit of hypotheticals here, right? So what I did here is I took the monthly income, the annual income, and I took the 1.32% times it by $100,000, and we would have made, if we had a $100,000 balance rather than the 10,000, $600 or $700 balance, we would have made $1,300 if we had exactly diversified into the same funds. Just had more shares. We would have made $1,300 this month, and on an annual basis, that would make $1,589. That's where you can really see it. So $15,849 is what we'd be getting paid if we had a $100,000 balance. So as we continue to grow this each and every single month, the balance is going to get bigger. The percentage into each individual fund is going to get bigger, and the dividends hopefully will get bigger as well. So, and also drip is going to help. The more money we have, the more drip we have, the more shares we have. So that's where we're sitting there at 100,000. At 250,000, it would bring our monthly income up to roughly 3,300 or almost $40,000 a year. At 400,000, we would have a $5,283 monthly income. And I got to remind you, I mean, $5,200 would come in and we don't have to do a dang thing. We don't have to click any buttons. We don't have to clock in at a job. We don't have to ask our boss for a raise. We're just getting paid $5,200 roughly a month. And that's at a $400,000 balance. Now, obviously at $400,000, you look at that and you say, oh my gosh, like there's no way I'm going to get to $400,000. But you'd be surprised each and every single month if you just keep investing over the long haul. We're talking 10, 20, 30-year period. You'd be surprised how fast it grows, especially if you don't take any of the money out. So that would be $63,000 of annual income at $400,000, $500,000, $6,600 a month. What's crazy though is on an annual basis, that's $79,000. If you didn't take any of that money out, that would reinvest $79,000, which is going to compound and compound and compound, right? So that would be an extra $80,000 in your pocket or $80,000 invested, and you wouldn't have to take anything out of your paychecks for that. And then I had to do the $1 million figure. I had to do it. So at $1 million, we're looking at $13,207 a month or $158,000 a year. That's where you want to be. So imagine if you built this portfolio over a 20, 30, 40-year period. You had $1 million split up into these same funds, and obviously you can move them around a lot, but we're talking about $158,000 salary given to you or $13,000 a month. That could pay a lot of bills. Hopefully at that point you don't have a whole lot of bills because you're retired. But if you weren't and you wanted to retire early, I mean, $1 million, you could get yourself, a $13,000 a month or $158,000 a year. So wanted to jump into that. Kind of a fun hypothetical, but it just kind of gives you the power of what we're doing here. Right now we're only at $141 a month in dividend income, but you can see as we continue to grow the account, these are the possibilities. So that's what I got for this week. Not a whole lot. Just continue to buy some of my favorite stocks each and every single week. Continuing to dollar cost average and continuing to stack those bricks. So thanks everybody for tuning in. Don't forget to like the video. Appreciate all the support, and we will catch you next week. Happy investing. See you later.